Alright. What is going on, everybody on YouTube? Griffin here, coming back to you guys with another live stream. Hopefully you guys had a good week, good morning, happy Saturday. Camera looks a little crooked here, so I'm gonna adjust it really quick. But hopefully you guys did have a good week and are having a good start to your weekend. I know there's a lot of you that also work weekends too, so keep it up out there, grinding on your weekends and whatnot. But hopefully, like I said, hopefully you guys had a good week and are having a good start to your weekend. First and foremost, if you're new to the channel, definitely consider hitting that subscribe button below. I saw as of this morning, it looks like we just hit 460 subscribers, so that's awesome stuff. It looks like overnight we gained like 5 subscribers, so that's pretty cool. We'd love to add you to our awesome community of like-minded individuals. And while you're at it, more so important than even subscribing, check out our Discord group chat. That's down in the description box. It's totally free. All you have to do is sign up. I think ask for your phone number just to make sure you're not a robot, but they don't call you, text you, or anything like that. There's a little over 40 of us in there now, so it's fun to, again, it's just easier to communicate with me and communicate again with a bunch of like-minded individuals on a hourly, minutely, however often you're in their basis. And like I said, it's the easiest way to reach me. But before I get started here, I just want to make sure that we're doing all right. Looks like we are all good to go. Got one of you tuning in already. And this video is going to be kind of just a little different. I mean, you can see I still got TD Ameritrade pulled up, which I'm going to talk a little bit about here in a second. But how all this ties in is just I came across this little article. It actually popped up on my iPhone because I have the app Investors Business Daily, which is a pretty cool app that you should probably get if you're into investing and whatnot. Obviously, it's the more knowledge you have, the more educated decisions you can make, of course. And we know, obviously, lately that subscription-based companies, subscription-based just businesses, whatever in general, a lot of businesses are switching to subscriptions, and we see it going over into our cable with stuff like YouTube TV. Sling TV was one of the first ones that really started doing this. Sling TV, of course, is like a sister company of Dish, I believe, but they really started this whole movement. And then you had, I forget who else, like DirecTV Now. Just there's so many different ones now, but like me personally, I know I have YouTube TV, pretty good price, has the DVR and everything like that for just about $42, $43 a month, and that's really obviously changing the cable game. But as I was just going through this article, what really struck my eye was this chart. Look at look at the overall economy, like the S&P 500 sales index growth versus subscription economy index growth. I mean, it's just night and day difference. I mean, by all means, we're still growing, obviously, on S&P 500 sales index, but we're definitely, I mean, any business that is subscription-based, obviously, has seen massive gains lately. Obviously, we've had a decent pullback in the market overall, but Disney, I'll talk about here in a second, but when we look at stuff like, I always forget what Netflix's ticker is. There we go. So when we see stuff like Netflix, I mean, this is just the last year. Even though it's down big time over the last few months, it's still up almost $100 from a year ago. So I mean, that's how much growth roughly in just over a year. So right now we're at what, 265 essentially. So we're up roughly 42% still in a year, and at one point Netflix was up about 130% early on this year. And I told you guys back when it went over $400, I said you better be covering profits if you're in Netflix, especially when we saw the double top for them. But anyways, that's a different discussion. And I honestly think it's going to start finding some support right around 250 personally. But getting near a pretty good time to buy, as is most of the market. But I mean, most big companies are adjusting to the subscription market. Disney, which I have pulled up here. Disney was obviously pretty volatile early on in the year, and then what happened? They teamed up with like ESPN, and they came out with this subscription-based like ESPN. What's it called? Not Watch ESPN, but ESPN3, I believe, or I forget the actual name of it. I have it. It's like $5 or something a month, and you pretty much get to watch sports, and you can cancel it at any time. That's the beauty of most of like the subscription-based stuff. That's why it's so attractive to people. You're not tied down to a contract versus a bunch of these like phone companies, cable companies, Even electric, like utility companies, all that stuff, they try to tie you down to a contract 1 year, 2 years in some cases, and if you try to break the contract, then you're still responsible to pay that remaining off. So then you're kind of just, you have your arms tied behind your back, because why would you cancel something when you're still going to have to pay the money anyways, right? So Disney hit big by teaming up with ESPN and doing that, and obviously it's been helping. They've had pretty good revenue growth because of that, and obviously we're right around $100 to $120 right now, whereas a year ago it was sitting right around 103. So I mean, obviously we've had a pullback, but Disney's still up about 20% overall on the year. And if you look at the low down in 97, it's roughly up about 25% or so, give or take. So good growth there. Obviously you have your companies like Apple. Apple switched before. A lot of you probably remember back when Apple Music, obviously Apple's down big time. You guys probably remember the old Apple Music, where pretty much you had no option other than what? Buying songs, right? And they were like $1.29 per song. And I remember personally, I probably wasted a couple $100 easily over a period of years of just buying songs that I really liked, obviously. But then who came in and switched up the entire game? Spotify. Spotify came in with that subscription base where it was like you could have a totally free thing, but you don't have so many skips and all that stuff. And then they had their paid version, which I believe now is like $10 a month, something like that. And obviously, again, the beauty is you can cancel it at any time and not pay any penalties. And they came in with the Spotify Premium, where you could pretty much make your own library. You could play through whatever, whenever, and skip all that stuff. You obviously had Pandora coming into a little bit before Spotify. Pandora still kind of lagging, in my opinion, when it comes to their subscription model. But obviously Spotify, Pandora, those two kind of came in and shook up the music market. So then you had stuff like Google Play Music, Apple Music. They had to adjust to the market. Now they also have subscription base. So I mean, these subscription base businesses, companies, are really coming up and shaking the economy. And what I wanted to get to too is look at this down here, subscription healthcare. This is what really struck my mind, is apparently this is already starting to take place within the healthcare market, which I believe personally, which they kind of hinted at here, it would I forget where exactly in the article it stated it, but pretty much it's a win-win for the companies, like the healthcare companies, the doctors, like everyone quote unquote wins, because you only need to pay for the healthcare when needed. Chances are you're probably going to pay a little bit more upfront, whatever the case may be. Like obviously the insurance companies, doctors, all that, they're not going to lose money, but it keeps you again from having to keep insurance all the time, even when like you're not going to necessarily need it, I guess. And I look for this also, if it's already going into healthcare, I'm looking for the day, well, it's probably not going to happen. I was going to say auto insurance, but I forget most states and laws, whatnot, you have to have auto insurance all the time. But it's kind of stupid if you ask me. I think insurance in general is legalized thievery. It's about like taxes, but whatever. But I just thought it was pretty cool how it looks like there's subscription medicines coming out and just a whole bunch of different services when it comes to subscription-based businesses. And obviously we know stuff like, was it Harry's? I think there's multiple razor companies that like Dollar Shave Club. I didn't know about the sneakers one. I thought that was pretty cool. Some examples include razors. Nike for Kids. I didn't even know about that. Nike for Kids sneakers. Apparently that's one. There's the Dollar Shave Club that I mentioned. I mean, there's just so many. And then obviously what they started mentioning later on in the article is how investors like are kind of rewarded by the subscription services. When you look at stocks like Adobe, Autodesk, Microsoft, etc. Well, one, they offer customers a good deal if you pay up front for a year. I don't really like Adobe's. Adobe's deal probably sucks the most out of all of them. If you go look at the Adobe Premiere for a year, you'll see what I mean. It's not really that great of a deal. It's like 10% off, something like that. But still saving you money. But then also, I didn't read this far down just because I was pretty excited about this topic. It was just a topic I thought everybody would like to hear about, so I just hopped on here for a live stream right after I started reading this. But like this, Adobe stock has risen 770% from the start of 2012. Autodesk is up 360% all time, and Microsoft is up nearly 320% as well. And obviously we know Amazon has just gone straight to the moon over the last, 10 years. So I mean, and then obviously you have your Apple, Spotify. Spotify obviously isn't really doing too well. I mean, it's pretty much around where it was whenever it came out as IPO. I believe it came out, around 125, something like that, 120, 125. So, but obviously we've had a good pullback overall, especially within NASDAQ, electronic companies, tech companies specifically. But let me get back here. So, needless to say, just what's this like gonna mean for us? I think in the long term, the subscription-based economy, I think they even mentioned this in the article as well, that this is probably going to go on at least, this guy says he believes it's going to happen for the next 20 years. I think it's going to be longer. Obviously, things can change practically overnight, but I think this is the way that the economy is ultimately going. I think you can see they start talking about Blue Apron and Walmart, and that's what I was getting ready to hit at. It's just, I think this is going to just go into our everyday life. You already see Amazon with, Amazon Fresh or something like that. Obviously, they teamed up with Whole Foods, and you get 10% off when you shop at Whole Foods with Amazon. But you can see how Walmart, Amazon, I look for Target to do it. Target's actually already starting to slowly do it as well, where you can already pre-order ahead, go pick your stuff up instead of having to shop around in the store. I look for them to go to something eventually, like all these companies eventually, to go to some type of subscription where for blah 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 dollars a month you can get like your basic necessities, your breads, your milks, your eggs, your meats, your waters, your soaps, shampoo, all that stuff. And you go in and nitpick the ones you want, and then they create a subscription for you where every month they'll deliver it to your door. And then it's just a win-win-win all around. More jobs are going to be created because they're going to have delivery drivers. Obviously, the amount of cashiers is going to go down because they're going to have more self-checkout. We already heard that cashier positions are pretty much going away, which I don't personally see as too bad for the economy because delivery drivers tend to make more than cashiers anyways. So it's kind of offsetting. They'll have the delivery drivers deliver everything, of course. Obviously, if you talk to some high-tech guru people, they believe that delivery drivers aren't going to exist in 5 or 10 years. I think that's a bunch of BS. I think that's still at least a couple decades out. I think that's still about 20 years out, personally. But just overall, the subscription economy, I mean, it's here. I mean, it's kind of been developing over the last, I would say this started probably, around 2012 to 2015. It kind of started developing. You had, like I said, Sling TV was one of the first ones that really came out with a subscription-based cable type of deal, streaming cable type of deal. I know that was the first one that I heard about back in like 2015, and it might have been 2015, 2016, but really since 2015 to 2016, subscriptions have just gone, I mean, just almost pretty much into every sector now that I found out that apparently even it's dove into healthcare some. That's what I really couldn't believe. It's already, I thought it would take a few more years to get into healthcare. I figured by 2020, healthcare would start to develop. And I mean, it's still not like obviously worldwide, nationwide type of healthcare subscription-based stuff. But I look for the healthcare industry to really start to go to more of a subscription base, probably by 2020, 2022 area, next 2 to 5 years. It's just, like I said, what does it mean for us? It means we have more options. It means we're going to get better deals because you're going to see a bunch of these companies start to kind of undercut one another to a certain degree. And I mean, it's going to be a win-win-win overall for the economy. And I think, if anything, this might help our economy continue to grow over the next, like I said, it might prolong the quote-unquote big crash. I mean, I'm slightly bearish on the economy overall. I mentioned that yesterday. Not like the economy specifically, but like the stock market. But as for the overall economy, I think that this whole subscription thing is going to prolong economic growth. I think we'll continue to have economic growth, probably at least through the next election, which obviously here in America will be in 2020, so that's another 2 years until we hit quote-unquote recession territory. But obviously the stock market has its version of correction, recession, all that BS. And then we have reality recession territory. Let me make sure really quick we're still doing alright. Looks like we are. Looks like I might be a little blurry. If I am, definitely let me know. But yeah, I don't want to take up too much here, guys, this time. I know it's early Saturday, mid-Saturday morning. Here where I'm at, it's about 11 a.m. I just wanted to hop on here because of, like I said, I just thought this was a pretty interesting article. Like I said, this is, if you're online, like on your computer, it's investors.com, or if you go to your app store, it's Investors Business Daily. No, I'm not like associated with them or anything like that. But like I said, I just thought this was a pretty cool topic to bring to just everyone's attention, especially, like I said, I did not know anything about subscription getting into healthcare. Obviously, it hasn't really become it hasn't really caught on yet, but who thought 2 to 5 years ago that subscriptions were going to be a big thing when it comes to cable, when it comes to internet, because even internet providers now are allowing you to cut loose. Most of them. I mean, there's a few that still make you sign a contract, but most of them just let you, whenever you decide you want to close, you can close now. I mean, contracts, all that stuff, I mean, they're going away. I mean, who would have thought like I said, 5 years ago, who would have thought that subscriptions would take over contracts? It's even happening with cell phones now. I mean, obviously, a lot of people fleece their cell phones, and that's stupid for one, but for two, I mean, the only thing you have to do to get away from your cell phone provider is simply pay the stupid phone off, and then you can go wherever you want. I mean, the contracts are pretty much gone. The only contracts you're signing is pretty much that you're either going to pay off the equipment you have, or you'll return your equipment, whatever equipment you have, in the condition you received it in. Other than that, contracts are pretty much gone anymore. Other than gyms, I know there's a lot of gyms. I actually am in a fight right now with the old gym where I was at Missouri, because nowhere in the contract I signed did it say anything about having to pay the full term. It said you could cancel at any time, and then apparently they tried turning me into collections for like $300 for when I was moving, and I was like, I'm not paying that. So yeah, we're in a big old fight about that right now, but who knows, I might just pay the damn thing and move on just to get out of my life. But like I was saying, it's pretty cool just to see just how this economy, it's kind of a new door opening to the economy. I mean, there's tons of businesses being open and thriving just by starting a subscription-based business in a market that was untapped. Like I said, Spotify and Pandora, for example. Obviously, Apple and them had to adjust to that. Disney developing with ESPN and whatnot. I mean, companies are taking advantage of the subscription model left and right, and I mean, it's opening a whole new economy, so to speak. So I look for it to continue to grow over the next 2 to 5, 10 years even, and I think, like I said, I think if anything, it's going to prolong the recovery, prolong economic growth, and I think long term, a lot of these tech stocks are place to be. I don't really think they're in a bubble. Obviously, we've had a really good pullback on all of them. They're all, I mean, in very good buying territory. Apple's down damn near to year lows. Like we were just talking, Spotify's off $60 roughly from all-time highs. Pandora as well. Pandora's not really off. Pandora's holding up pretty well, actually. I wouldn't buy it personally until around $8, $8.25 maybe, if you're into Pandora. I'm not really. Even stuff like SiriusXM, anything that's subscription based is pretty good safe buy, because they're gonna do nothing. Roku, another one, not really a subscription based company, but definitely on sale, off over 50% from all-time high. A lot of stuff on sale right now. SQ's another one that's more of a business based deal, but they're also off like 40% from all-time highs. I mean, you could just list all these. You could just go on and on and on. What are some other ones? like I said, Disney. Disney's not really. I mean, it's around a little support, but I don't really like. You guys know I don't really buy stock either. If anything, I'd place options on them, vertical spreads, all that stuff. So a lot of good opportunities out there right now. And like I said, I just wanted to bring this to your all's attention. If you want, what I'll actually do to make it even easier for you guys, if you want to read this entire article, I'm going to go ahead and copy it right now. And once the video uploads, I'll go ahead and paste it in the description box, and then you guys can just go to it straight from there. Or, like I said, you can just download their app. They have an app that's totally free too. And or you can just look it up. Like I said, it's investors.com. But either way, I'll post it in the description box after the video finishes uploading. But yeah, that's pretty much it for this quick little live stream. Like I said, I just thought that was a pretty cool article for anyone that's like just tuning in, maybe to the video, to the stream. It's just about the subscription services and just how every single sector is being disrupted by this new subscription economy, including healthcare, which I didn't even know about until I read this article. So, like I said, if you want to see this article, it's on investors.com, which is Investor Business Daily. Like I said, they have an app too. But I'll post this link down in the description box, and then after the video uploads, you all can go to it straight from there if you want. And like I said, if you're new to the channel, definitely consider hitting that subscribe button below. We would love to have you and add you to our awesome community of like-minded individuals. We just hit, I saw this morning, 460 of us right before I hopped on the stream, so that's awesome. Like I said, if we can hit 1,000, somehow hit 1,000 subscribers, or was it 1,000 or 500? I think it was 1,000, or maybe it was 500. It was 500. If we can hit 500 subscribers by the end of the year, I'm gonna do a special stream and pick one person in the chat for a little giveaway. I'll give someone Crushing It by Gary Vaynerchuk, Grant Cardone's Millionaire Booklet, and Rich Dad Poor Dad by Robert Kiyosaki. So we have about 2 or 3 weeks, about 3 weeks until that deadline, and we only have 40 to go. So we'll see. We're coming up close on it. But yeah, hope you guys did enjoy the stream or the video. Once you see this, if you did, definitely make sure to smash that like button. I greatly appreciate it. And like I said, check out our Discord group chat down in the description box while you're hitting that subscribe button below. But until next time, guys, keep on going out there making those profits, covering your profits, and achieving some financial freedom this year. And I will see you guys tomorrow for Sunday Stock Watch. Take it easy, guys.